This is a City AM Studios production.
Hello and welcome to Business as Usual, brought to you by Okta, with me, Martin Kimber.
And me, Matt Kenyon. Coming up on the programme today.
As the truce in the Middle East looks ever more fragile, the OBR and the Bank of England have modelled the worst potential outcomes for your mortgage and the public finances.
We get the corporate lowdown from our City Supremo, Simon Hunt. He gets stuck into HSBC's share slide, the ongoing saga of the Vodafone 3 merger, and, wildly, the Morrisons in Stockport, which is owned by the Crown Prince of Saudi Arabia.
Plus, we talk toilet roll, and we have a horror story for you in 4 words: the £10 pint. Hello and welcome back to Business as Usual. We have a really eclectic mix of stories ahead for you today. But first, as the fragile ceasefire in the Middle East continues to strain, City AM has uncovered financial modelling from the Office for Budget Responsibility, basically the organisation which marks the government's maths homework, on what the fallout of further closure to the Strait of Hormuz could be if it goes on much longer. Joining us now for his Business as Usual debut is our politics and economics reporter, Mauricio Alencar. Welcome to the studio.
Thank you. Very pleased to be here, making my
honour to have
debut.
you here.
Yeah, I'm so
What have you
excited.
found?
We know that the Strait of Hormuz has been closed. We know that oil prices have gone up. And the question actually will be, in a few months' time when we get to that budget and the pre-budget speculation is, are my taxes going to go up? Is Rachel Reeves, the Chancellor, or if she is the Chancellor by then, is she going to keep her spending plans intact? And what I've sort of gone and looked at is, has the OBR ever sort of done this before? And I've spoken to a few economists about this. And actually in 2024, Iran and Israel were sort of exchanging fire, and the OBR actually started modelling what would happen if oil prices went up by 70% and gas prices too. What would that happen for public finances? And they found that on average each year, at that point in 2024, the government would have to borrow an extra £23 billion every year on average. It's a big figure. I mean, we can talk about the nuances and complexities of what that means for taxes and headroom.
With that figure, then, how does that fit into the overall scale of government borrowing?
So the government borrows, obviously, the size of debt right now is about a
Colossal,
trillion, right? Obviously the government borrows about 160 to 180 billion pounds.
Okay, so it's a pretty substantial fraction of that.
Yeah,
of
it'd
that
be a
number
massive
added to
amount.
it.
Yeah, it'd be a massive amount. I mean, it's always talking about public finances is always a little bit complex because there are so many different moving parts and different rules and debt rules and calculations and rolling forecasts. And then all of that is just messy, and we could talk about it in a nicer, crazier podcast. But actually, we want to enjoy
Is there
what
a
we
crazier podcast?
I hope not.
What is Rachel Reeves' fiscal headroom at the moment, which for the people sort of listening at home who aren't tuned in so much to politics, fiscal headroom is essentially her emergency fund, right? The difference between what we take in and what we spend.
Yeah, so when we talk about headroom, we're talking about a slightly different area because that's kind of what the government says. They've based their figure on the current budget, which is basically, rather than the sort of capital investment, it's a sort of day-to-day spending. And I wanted to ask economists, using this OBR sort of analysis that's been done in the past, what does that mean actually today for Rachel Reeves' headroom? And they said, well, Rachel Reeves left headroom of about £24 billion. That's what the figure was in March, just as the war broke out. And now the headroom has probably been knocked off by about £10 billion because of their interest payments being higher. We've seen, yesterday we were speaking about borrowing costs hitting a sort of multi-year high that we haven't seen in 18, 20 years or so, depending which part of the curve you're looking at.
We're above Liz Truss levels now, aren't we?
We are in that territory, which is looking really bad and really quite scary. What the Chancellor could do this year is, when we saw that at the pandemic or in other parts of the Ukraine war, where the Chancellor turns and says, okay, this year I'm going to miss my borrowing target. So actually, because the economy is in such dire straits, we can't escape the energy shock. For this year, will allow the sort of break or emergency break.
All of those.
Yeah. So so that we can keep the economy afloat right now this year. Whether that's an energy support package to sort of keep inflation down, we can do this break. I mean, the more the government does that to every single shock, and depending how much it misses its borrowing rules by, adds to the debt load, adds to their interest costs, and that's just passing on the costs.
And it makes it more dangerous to do much borrowing at all. I suppose there is also the massive looming political question at the end of this week of what does the local elections mean, and is it even going to be Rachel Reeves making those decisions? I mean, what chatter are you hearing about the future of the Chancellor at the moment?
Well, so last week at PMQs, there was this quite a sort of funny line. I think it was a main line, in my opinion, out of PMQs, which was Kemi Badenoch sort of targeting Rachel Reeves, saying she's toast.
She's very good at that. She's very good at then getting Starmer then not to back her.
Yeah,
it's quite an effective move.
I mean, keen readers of various newspapers, including City M, will know that the likes of Ed Miliband apparently wants to be the Chancellor.
He seems to have taken himself out of consideration for the leadership itself and then kind of wants to make it a condition of backing anyone
possibly
that they've making Chancellor.
Well, I guess we'll have to wait and see how things pan out and how things go.
Good to see all these people are in it for the right reasons. Just finally, we have a new piece of data out today from the group Money Facts on mortgage bills that they're expecting to see jump due to Trumpflation if this stuff gets any worse.
Yeah, so these figures are based on the Bank of England scenarios from last week. And what that Bank of England monetary policy report already said, that mortgages each month are set to rise by an average of £80. So people are already sort of feeling the effects. And what the Bank of England did was they set out 3 scenarios of what the sort of benign middle scenario, I guess, and the worst case scenario of the Iran war. What would that mean for interest rates? The worst case scenario, interest rates would go up basically back to the highest the peak that we saw after
well over 5%.
Yeah, and what that would mean for mortgage payments is mortgage payments, wait for it, going up by an average of 3,000. I built it up at £3,000, more than £3,000 a year. So really hitting the kind of middle class kind of homeowners, people who've just bought their homes on variable mortgages. And that's in the worst case scenario. Even the best case scenario, I mean, we're already seeing £80 a month increase a month.
Well, we always like to leave you with positive news in the morning on this show.
Yeah, I think that we're very optimistic and possibly not about mortgages. Mauricio, thank you very much for joining us. I'm sure we'll have you back soon, especially as these pretty wild elections start to unfold later in the week. Right, so coming up after the break, why does the Saudi Crown Prince own a Morrisons in Stockport? It's a big question. And we tell you why even the toilet paper industry isn't immune from the conflicts in the Middle East. Don't go anywhere. This episode is brought to you by Okta. AI agents are everywhere now, quietly making decisions across organisations. That's great until you stop and think, who's in charge?
If you don't know who an agent is, what it's connected to, or what it's allowed to do, you can't really trust it to act in your interests. That's the bit Okta focuses on. They secure the identity of AI agents, so there's one clear layer of control across the whole system.
Which means every agent has a clear identity, permissions, and a line of accountability, even as things scale.
Risk becomes something you manage, not guess at. Secure every agent, secure any agent. Okta secures AI.
Welcome back to Business as Usual, and I'm thrilled to say that we are joined once again by our Supremo of the capital markets, Mr. Simon Hunt.
Pleasure to be back.
Well, it's a pleasure to have you back, Simon. But maybe not so much a pleasure for the good folks at HSBC. What's been going on?
So, HSBC shares down about 5% yesterday, which doesn't sound like a huge amount. Are we in slip? Are we in slide? Are we in slump territory? I think we're pretty far in that categorization. But given the size of the bank, that actually means about 10 billion has been wiped off its market cap, or more than 10 billion. So that's quite a big slide. And that's because we're starting to see the scale of the impact of the Middle Eastern conflict on banks. So HSBC has set aside $300 million specifically linked to the impact of the Middle East conflict. And it's also reported a $400 million, what it called a fraud-related secondary securitization exposure. Now that's a technical way. That's a technical way of saying we lost a hell of a lot of money, guys. Yeah. And they won't say exactly what that's linked to, although the word on the street is that is the private lender MFS, which collapsed earlier this year, and that's an exposure to that, we believe.
What was the thing that it experienced that you just said?
A fraud-related secondary securitization exposure.
Right. So
back in the day, we could just say fraud.
Yeah. The next time I lose some money on the horses, that's what I'll say has happened.
But it's interesting though, because clearly they're pricing in many months of trouble from Iran. So we've talked about this before on the podcast. The idea that actually this is going to be a rest of the year thing at the very least. Is that the impression you're getting?
Yeah,
from
very
HSBC?
much so. I mean, even if it's the case that everything were to be sort of over now, if there was some kind of permanent peace settlement agreed between the US and Iran, there is still ahead of a lot of supply disruption which has to be fixed. There is months of disruption that has to filter its way through the system, and that includes, in things like inflation and supply chains, but also disruption to financial markets as well.
Right. Now, if you're a customer of the 3 mobile network, you'll already be aware that it became sort of Vodafone 3, but it is changing again.
Yeah, only 2 years after this massive merger between Vodafone and 3, it's all changed once again because the owner of 3, CK Hutchison, has said, actually, we've had enough, and they're going to sell up and pull out of the deal. So that means Vodafone now own all of Vodafone 3. They've bought CK Hutchison's stake in the merger for about £4 billion.
Now, does this mean, because I'm a 3 customer, does this mean that I will now have different access to different parts of the Vodafone network? Are they merging in a similar way to what we'd expected?
So I think that merger has still happened and the sort of merging of all the infrastructure, the telecommunications.
So that's been underway.
That's been happening.
Got it.
So it's just the sort of ownership nature that's changing. Although what it probably will mean is some big changes appearing on the high street because, of course, at the moment you have Vodafone stores, you have 3 stores, and it doesn't make financial sense for this company to run both of them concurrently.
So are you anticipating some closures?
I would expect so. They haven't really put a figure on it yet, but I think we'll start to see that.
I'm always so surprised, though, just by that every network still has all of these brick-and-mortar outlets. They seem like they're one of the only businesses that are still so big on the high street.
Yeah, I mean, I don't understand it myself because I can't. I'm trying to think when I last bought a phone on the high street. I mean, I must have been
age 16 or something.
Yeah.
That's because you're at the cutting edge of technology, Simon. And just to say, Saskia Koopman, our tech reporter, actually did a really interesting interview with the business director at Vodafone 3 just a few weeks ago on how much your signal may or may not have improved since the merger. And he actually gave a pretty honest appraisal of his struggles with the planning system in getting 5G towers put up all around the country and how there's a big challenge there. So I would implore anyone to just go on YouTube, type in Vodafone City AM and sort of see what happens.
If they can get signal.
If they can get signal.
Yeah. Well, one day can someone interview me about the struggles I've had with my own mobile network, but we won't go into that. So Simon, one more story to discuss with you. Why exactly does the Saudi Crown Prince own a Morrisons in Stockport?
So I bet that's a question you never expected to ask, but it is the question we find ourselves confronted with today. So I've been spending the last few days looking into the sale and leaseback craze in the retail and hospitality sector. So this is when companies that are a bit short on cash or they've got debt that they need to pay start selling off the family silver. They start selling the land that they own, the buildings that they own, to private equity firms to try and free up some cash. And then they agree a leaseback arrangement where they pay a certain rental fee for a period of several years. And this is something that Morrisons have done. So they've sold several of their stores via this sale and leaseback arrangement to private equity firms. And one of them is a joint venture between Blackstone and the Sovereign Wealth Fund of Saudi Arabia. So they own four stores, four Morrisons stores that they bought for £110 million in 2023 in Harrogate, Newcastle, Malden and Stockport. And they're now reaping the rewards of that. So they collected last year a £4 million dividend from all the rents that they're collecting from these stores. So next time you walk into a Morrisons, you may well find it's a Morrisons owned by the government of Saudi Arabia. So,
But I take it as of yet, there's no operational management going on by the Crown Prince.
I'd be surprised if the Crown Prince has set foot in a Morrisons, to be completely honest. But you never know.
You might one day visit.
Yeah,
you never know.
I mean, that would get the punters in, wouldn't it?
Assistant to the regional manager. Thank you very much for coming in, Simon.
Thank you.
We're going to talk about startups. There are lots of them out there, and for every fintech payments firm or glossy challenger bank, there are several wackier startup firms out there. There are even companies which are disrupting the ancient industry of loo roll. And our very own Felix Armstrong, our retail reporter, has been speaking to one such founder. Felix, hello, welcome back.
Thank you for having me. So I spoke to Simon Griffiths, who is the founder of Australian toilet roll company Who Gives a Crap, who you may have seen their brightly coloured toilet rolls on the shelves of Tesco.
They've got great packaging.
They have, it's very good. So he was telling me about their model, which is quite unusual, which is to donate 50% of their profits. And their goal is to wipe out the problem of people going without toilets.
And Felix, it's safe to say that absolutely no one is safe from the events going on in the Middle East at the moment.
Yeah, quite. Simon told me about the problems the Strait of Hormuz is having in his supply chain.
I think like everyone, we're kind of monitoring the situation in Iran and the Middle East more generally and thinking about, what impact that'll have on our business. And one of the things that we have working for us is that where kind of oil prices put pressure on our products is often in the delivery to customer. We've got, electric vehicles that deliver our product in different parts of the world, which helps us to be a little bit more insulated from, that impact compared to other brands. And we're continuing to see how we can increase the number of EVs that we have delivering products around the world over time to help us, make sure that we're not only well insulated from oil price shocks, but also doing the right thing for the environment and looking at ways to continually improve our environmental footprint for our customer as well.
Well, that's very interesting that even they are not immune from those geopolitical effects. Although I will say, as a recent convert to Japanese toilets, that I think...
Do you have a Japanese toilet?
No, but I am saving up for one.
Really?
Yes.
An aspirational.
What, as in like one of the sort of robot ones that you see?
Yes, there was one
on
in
TV.
the old M restaurant in the city had one.
And this is so crass for me to ask this. How much would that cost?
Thousands. But I mean,
wow.
And it's not even to save the cost on loo roll in the long term or the environmental thing. It's just so much more hygienic. But anyway, we're going down a rabbit hole here, which I didn't.
Did you ask our founder friend about this?
I actually didn't. It was the one thing we didn't cover.
It's such an oversight.
You
we'll
didn't
forgive you
ask
this time.
I'm sure he would not endorse the use of Japanese toilet.
No,
that would absolutely ruin his business model.
Yes, that does threaten his business model. Now, Felix, just lastly, over the weekend, there was a big brouhaha about the terrifying milestone of the £10 pint emerging in London. But you've maybe looked into this a little bit more, and there's a bit more to that than meets the eye, right?
There is. So at Stanley's Rooftop Bar in Mayfair, there was an £11 pint of Moretti served on this bank holiday weekend, and that sent the Telegraph and the Times into a spin.
I can only imagine the data charts that came out of that.
Our own City AM investigation a few weeks ago, the average price of a pint in London is only £5.77.
Because I remember going to the Dorchester for a press thing a couple of years ago now, and they served me a £10 pint in one of their restaurants.
At a press night?
No, it was
horrendous.
It was free meal, but they gave me a pint of beer, and I said, "How much is this normally?" They said, "Oh, it's very good beer." I said, "No, how much? How much is it?"
Good.
And they were like, "Oh, it's a tenner." So that £10 pint has been around for quite some time.
But so, I mean, you've mentioned that the Telegraph have predicted that we might, by sort of the natural curve of inflation, reach the £10 pint by the late 2030s. Is that sort of broadly what we're expecting? Is that like in line with our...
I mean, I guess so. That seems worryingly soon to me. I'm not ready for that. As you can expect, the pub landlords and hospitality bodies are saying there's nothing to worry about. their prices, they're trying everything they can to keep their prices down, which of course they say are being pushed up by...
I mean, we report on this pretty widely, very much within your patch. I'm sure you speak to lots of proprietors. I mean, there must be a point where all the costs, the energy costs, the business rates costs, I mean, do end up just trickling down through the taps.
Yes, and I remember reading a breakdown of what pubs get out of a pint in terms of the cost, and it's about 3p, I think they make from it.
The British Beer and Pub Association, great people, they at Christmas they had some drinks and they were serving pints in pint glasses with marks printed on them to show this is how much the actual beer costs.
That's so clever.
This is the NIC cost. This is, all the energy, the tax, the blah blah blah.
I wish we were as creative as that.
Yeah, well, when we can start a line of business as usual pint club. That's an idea. Anyway, thank you very much for coming in, Felix. Lots of food for thought in that segment, as per usual.
Thank you.
Thank you, Felix. We give a crap.
Right, Matt, did you know that Kemi Badenoch gave an interview to City AM last week?
I did. I saw Kemi come into the office, yeah.
It was a really good one. She was a really nice lady. She answered a lot of questions. She did a whole half hour with Christian May, which can
very
be
generous, yeah.
Gave her quite a grilling, and she was very articulate and had a lot of answers to all the questions. However, there was one section of the interview that really caught my eye, and that was when Christian May asked Ms. Badenoch if she listens to any podcasts.
Yes, and she was a bit scathing, really, about the whole industry, and actually said that we might have already hit the high water mark.
There are too many podcasts, so I end up reading the news write-ups about the podcast rather than the podcast itself. I think Sarah Vine had a podcast that on the Daily Mail that I listened to. So the newspaper podcast. But there's so much news now. There's Times Radio. Sky News has got a podcast.
City AM's got a podcast.
Oh, have you? So it's just...
I mean, to be fair, only launched 2 days ago.
So, right.
Matt, do we have too many podcasts?
I think as of this week, we have too many podcasts. But as of last week, the industry was just short by one. And I think the hole has been plugged.
I agree. And on that note, it is time to end. Thank you very much for listening today. We really appreciate it, as per usual. Thank you for listening to Business as Usual, brought to you by Okta.
As ever, please do not forget to subscribe to City AM's various daily and weekly newsletters, and of course to download our free app.
It even has puzzles now. We'll be back in your podcast feeds tomorrow at 6 a.m. But for now, bye-bye.
Goodbye.